Morning, welcome to ANZ News. It's end of week, Friday the 20th of November. Another step closer to Christmas time. I don't know if you've seen it, but Christmas trees are up already. It's a bit ridiculous. Today we're talking vaccines don't cure debt. Findings from the IIF, or Institute of International Finance, and a warning from the IMF, the International Monetary Fund, bring the hope trade off the back of vaccines starkly into contrast as the world sinks under debt. Speaking at the close of the Bloomberg New Economy Forum, Kristalina Georgieva, Managing Director of the International Money Fund, she said she was going to urge the world's richest nations at the G20 meeting this weekend to continue their support for economies racked by the pandemic, despite the promising vaccine news in recent weeks. She says, a second wave of infections is slowing down the recovery. It is losing momentum, Georgieva said. It is so important that we don't pull back until we see the health crisis in the rearview mirror. So, in other words, more stimulus, more debt, more debasement of currencies until well after this pandemic goes away. Topically, the IIF just released its latest quarterly global debt monitor report, which unsurprisingly reported a yet again new all-time high global debt pile. This from the report. The pace of global debt accumulation has been unprecedented since 2016, increasing by over $52 trillion. While some $15 trillion of this surge has been recorded in 2020 amid the COVID-19 pandemic, the debt build-up over the past 4 years has far outstripped the $6 trillion rise over the previous 4 years and over earlier comparable periods. Strong rises in both government and corporate borrowing as the COVID-19 pandemic drags on has seen global debt increase by $15 trillion in the first 3 quarters of 2020 to more than $272 trillion. That's US as well. With little sign of a slowdown in debt issuance, we estimate that global debt will smash through records to hit $277 trillion by the end of this year. Following a record surge in global debt to GDP from around 320 to 362% in the first half of 2020, the rise in the third quarter of 2020 was more modest, at less than 2 percentage points, helped by the strong global recovery. We expect that the global debt to GDP ratio will reach some 365% of GDP in 2020. We're going to show a chart here that shows the parabolic nature of that. If you look closely at that chart, it's the red line. However, that relies on a continuation of the so-called V-shaped recovery prior to this second wave, which is exactly what the IMF alluded to and we discussed earlier this week. That more modest 2% could unravel very quickly. Here's another chart here. The past 4 years have seen the largest debt build-up on record. And so going forward, this from that report as well. As a result, there is significant uncertainty about how the global economy can deleverage in the future without significant adverse implications for economic activity. The next decade can bring a reflationary fiscal response in sharp contrast to the austerity bias in the 2010s. If the global debt pile continues to grow at the average pace of the last 15 years, our back-of-the-envelope estimates suggest that global debt could exceed $360 trillion by 2030, over $85 trillion higher than current levels. Here's that chart here showing where we're expecting global debt to be by 2030. Let's just unpack that a little bit. At the onset of the 2008 GFC, a crisis born of too much debt, the IIF's global debt figure was a mere $168 trillion. The global response to that debt crisis was to pile into more debt. At the onset of the pandemic, the figure was around $255 trillion. So in 11 years, we've added around 50% more debt, or $87 trillion, or nearly $8 trillion per year. Unsurprisingly, that debt load was starting to materially drag the global economy before the pandemic even took hold. The debt was largely inflating asset bubbles, as opposed to a productive economy, further exacerbating the debt burden drag effect. Since the pandemic, we have added a staggering $18 trillion of debt in just 9 months, or $24 trillion annualized, 3 times the pace since the GFC. We haven't reminded you in a little bit of time about the word trillion. It's one we weren't even using in finance at the turn of this century. That's right, the year 2000. 1 million seconds is 12 days. 1 billion seconds is 32 years. 1 trillion seconds is you saying 1 Mississippi, 2 Mississippi, 3 Mississippi for 31,710 years. That's the difference between 1 million and 1 trillion. A vaccine may save some lives, but appears way too late to save the global economy. Big news today. Welcome to the word trillion. Enjoy your Friday after news like that. Enjoy your weekend, more importantly. Sunny Queensland up here. Everyone started going to the beach again. Remember, AinsleyBullion.com.au for all things physical, AinsleyWealth.com.au for all things cryptocurrency, and GoldSilverStandard.com for the gold and silver-backed cryptocurrency, built and backed by Ainsley and stored at Reserve Vault. We'll catch you Monday.